Hello and welcome to another update video about Brett. I think it's time to look at this chart again, take a look at if we have any reversal, any breakout to the upside. Well, Brett is highly volatile, and Brett again reacted to the orange support region again once more after we dipped into it again. Most recently here up here in this wave 4, the price started to not respect anymore this trend line. So I think we can take this trend line out. This wave 4 is still unfolding, in my opinion, in a corrective structure. So there's no evidence that a substantial top has formed. I'm talking about the end of this rally. It currently still would suggest further upside continuation. That's at least how it looks to me. The move down looks corrective, which means we have overlapping corrective price structures. And I just don't have any evidence that a low has formed. We were exploring the idea that the wave 4 could have finished here on the 13th of June. However, it's only a 3-wave rally, so the market failed to create that 5-wave move. As you might know, whenever we have a correction complete, we can only really confirm that completion of that correction until or when we have the first 5-wave move to the upside, ideally followed by a 3-wave pullback. But let's first get the 5 waves up. The market failed to do so, okay? And that means until we get the 5 waves, we need to be on the side of caution. It's just a corrective rally. The market failed and dipped back into the support region. Also failed to break above the next breakout point here, indicated by the green line at 17.7 cents, 17.8 cents. And above that, I've got the 19.7 cent level as next breakout point or resistance. So yeah, I mean, it could be that we're working here on a descending wedge. I mean, these trend lines aren't very reliable. They are really just based on 2 touch points and not really anything significant. You could say low quality trend lines here. But still, I show them, don't be surprised if they break. But this could turn into, a descending wedge if we see a little bit more up and down movement. Current interpretation would be that we're still working on a wave 4. It's possible that not Bitcoin, but Brett is working here on a B wave still within that wave 4, but it could turn into so many different patterns. So as I always say, micro counting in a correction isn't useful really. It is useful to determine support resistance levels and to identify when a first 5-wave move has formed. Until we get that 5-wave move, however, be aware that there will be a lot of fluctuations in the microstructures. And please be aware that what really matters is what is the support area. And the support area is defined between 7.5 cents and 12.5 cents. As long as we're holding above 7.5 cents, there is no confirmation of a very substantial top. In fact, actually, this really looks a bit like a bullish flag here that's unfolding. So I would be in favor of upside trend continuation. However, I will stop watching for that as soon as the price breaks below 7.5 cents, because this is a break, as I said, below the critical 50% retracement, and it would be too low for a reasonable wave 4. Down here, this is sort of the price action from May. Bit ambiguous. We could say the wave 2 is here, it's here, whatever. There are many ways of counting this. Also, the initial startup candle is really unreliable, but because it really doesn't, there's typically low volume, or it doesn't really affect market sentiment that much. So I'm always hesitating, do I count this initial startup candle? But yeah, maybe we ignore it. I've labeled that as additional 1-2 setup, but that will not come into play until we form at least one more high. Also, I find micro counting of extended third waves really unproductive, especially when it comes to crypto and especially on these time frames. So it's not so meaningful. What is more meaningful is, okay, what's the support area? Okay, as long as we're holding above support, but below the breakout point here at around about 19.7 cents, there's just a lot of noise. And all we want to do with Elliott Wave is to understand the trend and when the trend breaks. Now, as per Elliott Wave, the trend doesn't break until we break below 7.5 cents. Now, if you're a trend line trader, well, it would have broken already, right? But I don't see any evidence from an Elliott Wave point of view. There might even be people who went short upon the break of the trend line, but they're not so reliable, these trend lines. So especially when we are talking about a break out against the trend direction. We know the trend is up, right? because we identify 5 wave movements to the upside and corrective structures to the downside. So a trend line break to the downside is not so useful in my opinion. It's more about understanding, okay, when do we get the next breakout to the upside? But then we have these 2 breakout points that I mentioned to you. The trend line, again, very low quality because really only 2 touch points. So yeah, be a bit careful with that. I just show it here. Sometimes the market reacts or creates a 3rd touch point, but it looks a bit like a descending wedge. These would tend to break to the upside. That's my update about Brett. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.